In today's video, we review the Commonwealth Bank, Australia's largest. We look at all the products they have on offer, what they excel at, and where they don't necessarily do so well. And if by the end of this video you like it, it'd mean the world to me if you could consider hitting that subscribe button. It's free and you can always unsubscribe. Thanks for watching and enjoy the video. So we begin by looking at the Commonwealth Bank's product suite. And really, when you look at it, there's 5 separate products they have on offer. 2 variable, which is 1 packaged and 1 non-packaged. 2 fixed, with the same package and non-package. And finally, what's called their Viridian line of credit. We're going to go through all 5 in detail. So the first home loan the Commonwealth Bank have to offer is what's called an extra variable. And this can really be thought of as a basic variable home loan. And looking at the details, what it is essentially a variable home loan with no fees. And the biggest drawback is it doesn't have an offset facility, rather a redraw instead. But the biggest draw is that you can pay off the home loan as quickly as you like. There's no ongoing fees, no monthly package fees, no application fees other than a $200 settlement. And in terms of the interest rate, you'll find that it's really dictated by loan to value ratio. And with the Commonwealth Bank, a lot of the pricing they offer is really linked to the loan to value ratio. And we can see here that the lower your loan to value ratio, the lower your interest rate. So this basic home loan, their extra variable home loan, is excellent for a lot of first home buyers who are just after a basic, no fee, no frills home loan, which they can pay off quicker. Okay, so the next product the Commonwealth Bank has to offer is what's known as their standard variable. Now, what we can see on our screen is just that product. Now, the standard variable you always take with either their wealth package, as you can see here, also known as a mortgage advantage package. And essentially what that is an annual package fee of $395. But what it allows you to do is it allows you to add additional discounts to the standard variable. So without the discounts, it'd be actually much higher. If we go back to the standard variable, you'll see that the standard rate is 4.55%. So quite a discount. But what's more interesting is that what your banker or broker will do is they'll look to increase the discount. So whilst the standard discount for a standard variable is 0.7% under the wealth package or the mortgage advantage package, what your banker or broker will do is look to increase that. Now, essentially, the lower your loan to value ratio and the higher your loan amount, the higher you can expect this discount to be. So essentially, the standard variable is the product which allows all the bells and whistles. It allows you to have split home loans. It allows you to have your offset. Essentially, everything you can imagine, this is the bells and whistle variable home loan. Now looking at Commonwealth Bank's fixed rates, and it comes in one of 2 scenarios, with or without the package. It's a fairly simple one here. Typically the package will give you a minimum 0.15% discount, as we can see here. However, your banker or broker may be able to increase that just depending on a number of factors, including your loan to value ratio and loan amount. With this being said, what the package also allows us to enjoy is to waive the $8 account keeping fee and the upfront establishment fee. Typically for a fixed rate, taking the package makes sense once we're over or around that $250,000 mark. Depending on the additional discount, whether it's more than 0.15%, will dictate whether that changes. But general rule of thumb is around that $250,000 mark. As you'll see, there still is enough of a benefit for it to make sense. Some of the drawbacks with the Commonwealth Bank's fixed rate is that you are limited to the additional repayments you can pay each year. So on top of the minimum payments, you can pay up to $10,000 per annum. And unfortunately, you don't have a redraw or offset facility. So a few drawbacks to consider. However, if you're under the package, you can look at having a split fixed and variable home loan. And the final product the Commonwealth Bank has on offer is known as their Viridian line of credit. And essentially what it is a variable interest only term. It's quite deadly and it's not something I recommend anyone. Essentially, most people will never pay off the mortgage because there's no need to. You're just paying back the interest and that's all that's required. It also comes at a hefty fee in comparison to the other options. So this is the type of product, unless you're a sophisticated investor, I'd avoid at all costs. So what are the three things that Commonwealth Bank does exceptionally well? My first one is that they do grey. And let me explain. With most banks, everything's black and white. It's either fits the box or it doesn't. With Commonwealth Bank, they'll consider things outside of the box. And let me give you an example. Meet Johnny, who is a great example in how well Commonwealth Bank look at grey. So ordinarily as a self-employed applicant, the banks will want a minimum 2 full financial years tax returns. They'll also want to see the variance between the 2 years. So if 2019 was lower than 2020, they'll take the lower of the two or a maximum 120% of 2019. So Johnny had approached us having been declined by his bank for them not being able to meet what's called serviceability. Their bank essentially wasn't able to use any of Johnny's self-employed income. And looking at why this is will make more sense. So Johnny started his business and he's a project manager. He started in March 2019. Essentially, he was transitioning from an employee that's known as PAYG over to self-employed. And you can see in 2020 that transition started ramping up, and in 2021 it was fully realized. Now the trouble is that most, as I said, the banks will want full financial year. With us applying in February 2021, we were only 8 months in the financial year. So with most lenders, or with practically all lenders, they'll discount 2021. And at best, even if we had 2021, we'll look at 120% of 2020's income. So let's look at that with a calculator. So maximum most banks would look at is 120%, which is about 31,000, not enough for us to meet serviceability. So with the Commonwealth Bank and us explaining the situation with his contract income, with his regularity, with his couple of clients who are able to give him regular income, the bank was able to consider us adopting his 2020's income with both his self-employed and his employee income, as was an accurate reflection of what would happen in this financial year. And the long and short of it is that the bank, Commonwealth Bank, was able to apply common sense to his situation, which for many would be near impossible. And a great illustration of the Commonwealth Bank's ability to look at grey, and whilst it doesn't meet all the parameters and all the boxes that are there, from a logical and from a make sense point of view, was able to get the green tick of approval. The next thing that Commonwealth Bank excels at is high loan to value ratio. Not only don't they change their criteria, so a lot of lenders, if you're an employee, will need you to be longer in your role or have more industry experience once you're in mortgage insurance territory. Commonwealth Bank doesn't change that. So whether you're in or outside of mortgage insurance, their criteria is the same. Or whether it's that you don't have what's called genuine savings, a savings pattern. So for example, if you have a 10% deposit, you don't actually need genuine savings with the Commonwealth Bank. Or alternatively, if you are over, if you have rental history, it can substitute the need of a savings pattern. Overall, what I think the Commonwealth Bank does well is high loan to value ratio loans. And the final thing the Commonwealth Bank does exceptionally well is to be consistent. Through COVID, we saw many lenders change their criteria like it was a knee-jerk reaction, from changing the loan to value ratios that they'd accept all the way through to completely getting out of the market for self-employed. So the Commonwealth Bank, we don't see that. They're very consistent. Once they choose a lane, they stick with it. And it's very unlikely that they have knee-jerk reactions when the market's tumbling. And through COVID, we saw that. They were still approving loans. They were still making common sense decisions. Okay, so we've covered the 3 things I think they do well. Now let's look at the 3 things I think they could do a little improvement with. The first one is that they've got long memories. Let me explain. So if you've ever had an account with the Commonwealth Bank which had issues, for example, defaults, late payments, even if it's not on your credit file, the Commonwealth Bank still use those records to decision and scorecard your application. The Commonwealth Bank have 5 scorecards, and they call them category 1 through 5. If you scorecard a 4 or a 5, it could mean an automatically declined application. And I've seen that before, where when we applied, the applicants had no idea that even though their credit file was clean, that their history with the Commonwealth Bank would come back and haunt them. So it's something to keep in mind if you have had a few issues in the past with the Commonwealth Bank, as their memories don't fade. The next thing I don't think they do so well is Guarantor home loans. Previously, they'd allow up to 80% leverage on the guarantor's property. Now, recently having reduced that to 70%. Also, they typically require the guarantors to be in a position either working or being self-funded retirees, whereas other lenders won't necessarily assess the guarantor situation at all, and so long as there's enough equity, will allow the guarantee to proceed. And the final thing I think they don't do so well is what's called postcode restrictions. So if you're looking to buy a strata property, typically these are units, apartments, and sometimes townhouses, the bank may actually charge you mortgage insurance even if you have a 20% deposit. Typically, to avoid if it is in a postcode restriction, you may need up to a 30% deposit. And there you have it, everything you need to know about the Commonwealth Bank. And remember, if you enjoyed this video, please consider subscribing. Here at Hunter Galloway, we get home loans approved. So if you live in Australia and looking for a mortgage broker, we can help. Visit us online, huntergalloway.com.au, or call us on 1300 088 065. Thanks for watching, and I'll see you next time.